For our COBT listeners and viewers, it's Maynard, Mike, and Deborah Byers here with a really fun discussion today with Giacomo Prandelli. I started reading the Merchant's News on Substack. We started forwarding it around on Veritin. Deborah told us she was also reading it. And we just really appreciate, Giacomo, all your work around the macro. There's never been a time when the macro has been this interesting. So let me just pause and say we reached out, and we're so excited that, Giacomo, you said you would join us. I think you live in Switzerland, but you are in Italy on vacation, and you spend a ton of time around the world. So a world traveler, a world thinker, Giacomo, welcome. We're delighted to have you.
Hello, everyone. Thanks for having me. So yeah, I'm living in Switzerland, but the beauty of Switzerland is the fact that it's not far from a nice, beautiful area of Europe. So that's why right now I'm traveling in Italy. And honestly, right now, the focus is not in Europe, as you know, is in Middle East. My eyes are on there.
Well, I have a feeling as we talk to Giacomo, we're probably going to be talking about many areas of the world. But Mike, what would you tell us about the markets before we jump in with Giacomo?
Yeah, man, I'm going to try to make it pretty quick because we're looking forward to the conversation today. From a bond market standpoint, the interesting thing is bond yields have moved up. We're at 4.62% on the 10-year. That's close to the 4.66% made at the Iranian war highs. What's even more remarkable is the 30 years at roughly 5.14. It kind of peaked out at around 5.18%. So yields are definitely up. I'd say from a broader market standpoint, the S&P 500's up a little less than 1%. The Dow is up around 400 today because you have some really good earnings from M. The stock's up around 8%, and you have Cat's up 3%, Honeywell's up 3%. So really, a big move in the industrials today. I'd say as far as, what we're thinking about this week from an earnings standpoint in the broader market, you've got Google results, Tesla results, IBM's results, Intel, and NextEra Energy. So a lot to chew on this week with those companies. As far as oil markets, Brent's trading around $91 today. That's up about $3 per barrel so far this week, and up around $14 to $15 a barrel over the last 2 weeks. I'd say, we're now obviously going to talk to our guests today about the oil markets and refining markets. But what we've said for the last couple of weeks is we really don't have an oil supply problem, not necessarily an oil supply problem. We think we have a global refining problem. And if you look at where cracks are right now, Gulf Coast cracks are around $70 a barrel. That's kind of unchanged for the week, but they're up from $60 a barrel 3 weeks ago. And before the war, Gulf Coast cracks were at $25 a barrel. So clearly that's where the problem is. I'd say as far as the energy markets, today we had Halliburton report results. The stock's down a little bit, but we're going to see results are going to be happening tomorrow with Weatherford. On Wednesday, you're going to get Oceaneering and Liberty Energy. And on Friday, you're going to get this in SLB. So we'll have a good idea of how the oil services market looks both domestically and internationally. The last thing we'll basically say is that EQT and Range report tonight, but we also have a handful of other companies. We're talking Equinor, Kinder Morgan, Total Energies, Ovintiv, Repsol. So a bit of everything from energy this week outside of the refining companies, but we'll get those companies about 2 weeks. So with that, Maynard, I'll hand it back to you.
All right, awesome. I think, Giacomo, as you go into this discussion, what I'll try to speak for me, Mike, and Deborah, is most energy executives have been really taken and a little bit surprised by how oil price has behaved through this whole thing. Because going in, everybody knew the Strait of Hormuz is one of the single biggest variables you could imagine messing with in global oil markets. So the fact that the strait has had so much trouble and so much constraint, and yes, markets have reacted, but they have not reacted in the way one might have guessed. I think that's collectively that's what's on the mind of energy executives, trying to unpack all this. That's why we're so excited to have you.
All right. No, so yes, absolutely. The work behind the presentation that I bring today is about that. So trying to understand why the oil prices didn't move in the way that we were expecting. And there are several reasons. Of course, one of them is about the SPR. So what are those? Those are the strategic petroleum reserve that US had in the past, and right now they are falling and sinking very heavily. Why? Because at the beginning of the war, so when we were in February, the issue about the Hormuz Strait and about the vessel that they were going in and out as they used to be previously was a huge factor for Trump, because one of the key statements of Trump was to keep the oil price down. And of course, on top of that, the market, absolutely, that is the key player here. They needs to have oil to be refined or to be exported. And that's why US, and on top of US, all the G7 countries, they decide to deploy some strategic reserves in the market. And week after week, we were tracking those numbers, and the levels was literally sinking. But what is interesting here to see in this chart is the fact that a couple of weeks ago, when there was the hope of a possible peace between Iran and US, the levels start changing. Why? Because the Hormuz traffic was keeping at the previous levels, at least not the same levels, but was trying to rebuild the flows that we used to see in the past before the war. And this is very important information for us, because it means that the market is still alive. Of course, during this war, we saw terrific things like destruction of refineries, pipeline attacks, and also oil storages from Iran, but also from Saudi Arabia. We saw Qatar, what happened in Ras Laffan for the LNG topic. We saw many things, and our understanding as an analyst is that, okay, with this amount of destruction of the major capabilities and infrastructure for the oil business, our assumption was, okay, even if the strait will reopen again, the levels will not be the same. But as we are seeing right now that we have the data, the market was recovering faster than we expected. And of course, right now, since the war reignited, we are looking at the same, let's say, scenario that we used to see in the past, and so the SPR are growing again. So I think this is the overall the story. If we speak about the Strait of Hormuz, they show us that they have the capacity to come up very fast in the market. But if you look at other players, such as Russia, right now is another important topic. I think that their infrastructure has been even more damaged. I'm speaking about the refineries and also their flows. So overall, one of the key factors that keep the oil lower than we expected is the fact that countries such as US, they release the strategic reserves. But the problem here is that this is a tool, of course. Any country, they have different tools to keep the oil prices down. This is one of the major ones. There are also others, like relief sanctions, like US did with Russian oil. But right now that the US and the other G7 countries, they use their tool and this tool, specific tool, and we saw the pace of this SPR that were falling very fast. I don't know if in the future, with the conflict that is still going live right now as we are speaking, I don't know if they can keep using that, because they are not infinite, as you can see here. And now we are touching the levels that we saw during the Reagan's presidency. So
can I ask you this, so make sure we heard what you said? You said when the strait reopened, these are my words, not yours. You noticed in the data, or now we can look back and see in the data, that the reserves, I guess mainly the US SPR, were starting to fill again, or the rate of depletion was slowing down significantly. And to you, that means that we were, and again, these are my words, we were getting more oil through the strait than we realized. Is that what you said?
specifically for US is slightly different. So the fact that, of course, US is one of the biggest producer of oil worldwide, actually is the first one. it means that from that specific period that just passed, the world was not demanding, only to US, but also to who? To Saudi Arabia, to the Emirates. We saw a really fast increase in the export from the Emirates and production. One of these points were also related with OPEC. Since the beginning of May, the Emirates are not part anymore of OPEC. And this is a major change in the oil dynamics because OPEC usually try to cut the production or to at least manipulate the production to keep the oil prices under control. Without a major player such as the UAE, now they can produce as much as they want. They don't have any fixed production numbers. And so this was another point to add in the overall story. And on top of that, we also were tracking the Iranian flows. So during the peace period, let's say, Iran was heavily shipping oil to China. So this is another data to take in consideration.
Okay, so I'll try again. It wasn't that we were perhaps underestimating the flow of oil through the strait. It was just that the system, whether it was UAE, Saudi, Iran, or even the US, the system was recovering and flowing more oil in various ways than we realized. Is that a fair summary?
Yes, that's my assumption.
Okay. You know, I was looking at this chart before the discussion today, and today happens to be July 21st, the anniversary of the very first injection of oil into the US SPR. It happened on July 21st, 1977. This is courtesy of ChatGPT, so, I got my fingers crossed. 400,000 barrels from Saudi. So just a fun fact there.
Yeah, and I think this data that you just mentioned to me is kind of significant to underline. Why? Because you say that it was from the Saudi, right? And in the past, US was heavily linked with the production of the Saudis, but also from the Gulf countries after. And that's also why they created the petrodollar system, as we know. But what is interesting for me now to understand and to try to also analyze better is the fact that US took over the Saudi production. Right now, the US is bigger. Also because there was the Perman based in, let's say, innovation. And right now, US can really produce let's say, higher volume that used to be in the past. And when US created those SPR, at the beginning, the US needs oil from other countries. But right now, US is showing to the world that they can not only provide the oil from themselves, but also for everyone else. So I think this is a very important point also to the discussion.
Giacomo, or Jack, I'll call you Jack because I think that's what you go by on X. It's interesting. There's really a combination of factors, which is what I think, Maynard, you were talking about, that maybe experts as a whole didn't take into account. One, the alternative routes were more resilient and available to the UAE and to Saudi Arabia. I think those routes are known. And there was more workaround to get Iranian oil, not just during the peace period, but when the strait was closed, through Malaysia, for example, ship-to-ship type transfers, and the dark fleet had arisen. So my question for you, when you look back at the data, but then also during that period, what information or signals were you seeing that you think maybe sort of traditional analysts may have been missing? And how are you looking at that information?
So you open another interesting point right now, and I think is linked with the other slide that I'm showing about the Chinese imports. And the fact, of course, you mentioned the Malaysian one. Actually, when we speak about Malaysian oil, if you look at the first side, it means, okay, it came from Malaysia. What's the issue? No, actually is Iranian oil and under another name, and is a way, of course, for the Chinese market to keep this kind of oil from sanctioned countries. But not only, also we saw similar things from Russia. And as you know, China, and here, if you can let me, I would like to discuss about China and the importance of China in the oil field. So China now is a massive player if we speak about demand of oil. Is the number one worldwide, just from the supply that they need to provide for the economy. Is different, is slightly different from US, because US, of course, as I was just saying earlier, they can provide themselves from their production, but this is not the same from China, because they don't have enough production or resources as US does. And so China is heavily dependent on the import. But at the same time, what is important to say is that the refinery in China, so the teapots refinery, especially that are the private one, not the country refineries, are made, were built to refine a specific kind of oil. And this oil usually came from the Gulf countries. Okay, so that's why we saw a slightly decrease of imports from China, and actually they were out of the market, and they were keep using their strategic reserve, of course, that are massively higher if we compare to the reserve of US. Actually, last year we were checking the data of the SPR of China, and as we try to think that they are transparent and real, of course, they were accumulating, let's say, huge quantities of oil. Why? Because, of course, the prices were good. Last year, the price range was about 60, 65 US dollar, both for Brent and WTI, that range. And if you compare to now, of course, the prices were much better. And they're kind of preparing for something. And right now, so during the war that we were seeing between US and Iran, you literally saw the fact that China stopped the importation of oil from Malaysia, that is a key hub for them, but especially also from Russia and for all the rest of the world, or at least they were importing, but not at the same level as previously. And this can tell us an important thing, that even if US has abundant quantity of oil, and also other countries such as Ghana or some countries in Africa, the quality of oil is very important for each refineries. As you know, in US, the Gulf refineries are built for heavy oil. So the one from Canada or Venezuela right now even better. And if you stop the supply from a specific region that can literally supply you the quality of oil that your refinery are built for, that's where is the real problem. But luckily for China, they were huge stock in their reserves. And right now, the information that is important is that the information that is confirming my theory is the fact that when there was the little relief in the conflict, the level of importation from China jump up again. Why? Because they need the specific quality of oil from the Gulf countries.
Jack, can I ask, and Deborah has helped us move to Jack, if you don't mind. Although I feel cooler saying Giacomo, I have to be honest. How much oil in the pause did China import into its reserves, or just how much were they able to get? Do you know?
Yeah, so the data that we were looking at, and also other major media that we were saying, is over 1 billion. So 1.2.
During the pause?
No, excuse me, last year.
Last year. So total storage over 1 billion, 1.2.
Yeah. And during the pause, they were roughly capable of getting more than 9 million barrels. Okay, this is quite a good number if we think that the daily production per day, of course, the daily production of the war is roughly 100 million barrels per day. They were getting like 10%, is a massive number.
And how much in total were they able to put away during the pause?
Again, here the thing is that the data are not very transparent because they were if we just focus at the number from Saudi Arabia, we saw that Saudi Arabia sent a couple of vessels to China. But if we look at specifically the import from Iraq, so the Malaysian one, of course, here the number are more, let's say, in the shadow. But still, we can track the vessel, we can try to understand the amount. And here, like from the Iranian vessel, we know that roughly about 4 million barrels were imported by China. So this is another important number to underline. And the interesting thing is that China is not paying at the full price, as you know. And this is also the theory behind Venezuela and now Iran. So China in the past created a sort of ecosystem from some specific supplier, such as Venezuela, Iran, Russia. Who are those players? Of course, they are very important players for oil. Venezuela not for production, but more from reserves. Russia and Iran, actually, they are also important for production. But those players were sanctioned by who? By US and the other countries of G7, of course. And so the only reliable supplier for them was China. But China didn't pay the full price as if you want to purchase some oil from US, you should do. They were paying a discounted price because no one were willing to buy oil from them. And this is the ecosystem that, in my idea right now, the Trump presidency is trying to take down. First with Venezuela, of course, that now Venezuela is working under the control of US and is shipping mainly to US. And right now with Iran.
Yeah, Jack. I mean, I want to go back sort of to the title page, and you had 3 bullet points on there, and the bullet points were why prices fell, who runs the market, and what is fragile underneath. And maybe I want to focus on the second bullet point, who runs the market. I guess my question is, now that we're sort of 4 months, 5 months in, who do you think runs the market? What did we learn here? Because I could point to OPEC probably doesn't run the market as much as most people expect. China probably runs the market more than most people expect, but also that the global refining network has played a huge role here. So when you start to think about where we were pre-war and where we are now, what have we learned? Who is actually running this market that we didn't really understand beforehand?
So thanks for the question. Actually, yes, I also have a slide for that. And of course, in the slide that I want to show is underline who are the key oil producer, at least the bigger oil producer worldwide, and the biggest oil consumers. And as you can see from this slide, who's winning at the top, so the biggest oil producer and the biggest oil consumer is US. And of course, I think this is a very important role, is a pivoting role. And you were talking also about refinery, and I will come up to that also later on. But the important data here is the fact that US was capable of developing, not, as you were saying also before, from the SPR, the first supply from Saudi Arabia. So in the past, US was dependent on oil production. Right now, and today's, we have a completely different story to tell. So US is still the number 1 player if we speak about oil production, okay? And this data is not just crude oil, are all the liquids, so all the refining oil and crude oil. And when we speak about oil, the biggest oil consumer, again, US is on top of this chart. Why? Because they understood the fact that they need to develop cheap and reliable energy. And to become a stronger economy, you need to have those kind of energies. And oil is one of those. Also, if we speak about LNG and gas, US is a strategic player. But since now we're speaking about oil, this is the key message. US is still the player. As China is doing with the metals, I don't know, maybe, of course, you are familiar with the fact that China has the monopoly on refined metals and rare earths. US is doing the same with the energy field. Okay, so this is sort of fight underneath between US and China on the control of the commodities. And US, of course, is in a very nice spot if we speak about energy. And US understood it when? He understood it last year when China was imposing again other sort of threats on the export of rare earths. Before Trump was imposing tariff on China, and so China used the rare earths weapon. And after that, I think US understood the fact that China is playing a pivotal role with the minerals and the refined metals in the world, and US is trying to do the same with the energy. So when you're asking me about who is the key player right now, I have no doubts of saying the US. But at the same time, if we're speaking about the demand, because of course you can produce a goods or a commodities, but there is someone that is willing to purchase it. And from this chart, we see that US can sustain alone, but China is a massive player in demands. And China can literally move the prices. How? Here, I have another slide to show you. So the second slide is related to the exports. This year, the crude oil export to US, they hit a record. So 6.2 million barrels were something unthinkable a couple of years ago. But right now, US again created a sort of infrastructure that helps them to be the player that in the past just the OPEC countries were positioned to do. So of course, Saudi Arabia is still a massive player. Russia, again, is still a very important player for the oil market. They are the top three, let's say. But there are some new players coming up, such as I'm thinking about loudly Guyana, or maybe also Argentina. So of course, Brazil and some African countries. Those are the players that are coming up. But still, US is capable of, with the infrastructure and technique, to have the facility to export the crude oil. And this data, I think, is very important because, again, links with the discussion that we were saying earlier. So US was capable of exporting record numbers of oil, but when the Trump and of course when US and Iran decided to sign the MIU, there was a drop. Why? Because the market was starting to ask oil not just to US, but also to other players.
Can I just ask you, Jack, on the slide here? So does this capture when we release barrels out of the US SPR?
Yes, using also the SPR, but I think the majority of SPR were used by US refinery because the quality of oil that the US refinery are using is heavy crude oil, and is the one that is hidden in the strategic reserve because they are made to keep the production alive of the refinery. And the crude oil the US is exporting is different. The API gravity is slightly different. So moving to the next slide, and I think this is the question, is about the refinery. So who are the major players in the refinery ecosystem? And here we have China, US. They are basically equal if we speak about capacity and production. And this is important because when we speak about a refined product, we usually think about gas oil, diesel, of course, those kind of basic products, but you have also kerosene, so jet fuel. You have also petrochemical products that are important for the Chinese manufacturing economy. So really, the Chinese economy is also built on oil, and they are dependent on oil. And that's why they created, of course, the refinery infrastructure. And here, when we are seeing right now in Russia that Ukrainian drones are attacking heavily the refinery in Russia, I think this is a massive pivot from Ukraine. Why? Because you cannot sustain a war against another country if you don't have the facility that are giving you the gasoline to move the tankers. You don't have the fuel that actually is getting you ready to fight, no? And to move the thing that you need to go to war. So again, the refinery are very strategic for each countries, and the three key players right now, they are all living different stories. Russia, of course, is heavily attacked by Ukraine. China is using their strategic reserve heavily to try to fix, or at least to keep the production alive. And right now they have an export ban on gas oil and diesel. So they're using just internally. They cannot export it as they used to do in the past. And US is trying to become, at least right now, is the last supplier of the world, because they have the production, they have the crude, and they are exporting the refined oil worldwide. So I have an interesting slide here that literally anticipates what I just said. And the story here that I want to underline is how bad the situation is in Russia. Of course, we read the news, we read the headlines of the different newspapers, and we know that Ukraine is involved in a terrific war against Russia since 2022. But something now is different. So something slightly changed from the previous years of this conflict. So also through the technology and the drones and the discovery of this new way of making war, we saw Ukrainian drones that are achieving some objectives, very strategic objectives in the world map, and they are attacking not the cities, but the refineries. Why? Because they understood that the production of the refined product is crucial to sustain a war, and right now Russia is heavily under attack. And of course, Russia won at the beginning, when now want to switch to another war. At the beginning of the war between Iran and US Israel, we saw that Russia was winning very hard in terms of making revenues. Why? Because they used to have oil, they used to have refined oil, and the US decided to took off the sanction on their crude oil and refined oil. So they were literally, they were capable of selling oil with everyone without any major issue, okay? But right now, so they were capable of generating huge profits. If we know, no, actually we know the major countries that were importing Russian crude oil, that is India. But right now, Ukraine understood that the real element to be taking under attack, or the real target, are the refinery, to destroy or at least create a sort of danger in the ecosystem that Russia created to sustain the war. And so they started attacking not only the shadow vessel, as we know, a lot of Russian vessels that were transporting oil worldwide, now they are under attack from Ukrainian drone, but not only the harbor, but also the refinery. And here is the story. So the capacity right now of Russia is under a threat from Ukraine, and Putin already said to the news, but again, we don't know if this is the reality or is a way of lightening the actual situation. Is saying that with a couple of months they can restore the production again, but I'm not very, very sure for that. And the data are telling us that Russia is demanding refined product from India, and of course they're willing to pay a huge price on it. And the same thing is happening with China. So also they are asking to one of the allies, so China, to Xi Jinping to supply the refined products, but China put a restriction on the supply of gasoline and diesel. And this is how bad is the situation for Russia.
So I think what we've learned here about who runs the market is that China basically imported a lot less oil than people thought they were going to do. I mean, they took essentially 5 million barrels out of demand when supply was down about that much. But the other thing we've learned, and every time you listen to a U.S. refiner call, is, the turn is right around the corner. The cyclical turn is right around the corner. It never really came. And what we learned here is after these refineries got knocked off in Russia, that the turn is a lot closer. The system is a lot more fragile than we thought, and this is why we've had an explosion in margins here. So I guess the question, I think you already answered that, 1.5 million barrels is off the market for Russia, particularly diesel going to Europe. If I told you like next year 1.5 million barrels were going to be added to supply, refining cracks would be at all-time lows. But vice versa, if I told you 1.5 million was going to be gone for a good bit of time, you'd see yourself in this position. So it seems to me that what we've learned is China can cut a lot more quickly than we think. And, global refining is a lot tighter than we thought going into this war. Is that a fair assessment?
Yes, basically you zoom in the right issue and the points of my answer. Yes, so the refining system right now is not safe and stable as we thought, because it's heavily concentrated in some specific countries, and if we miss the crude, we cannot run the refineries, and if you don't have the refineries, we don't know where to ship the crude. And but I have another point to add. So right now, and this was the example of this year, China was capable of using their strategic reserve of oil. And the same is doing the US, and the same is doing are doing the G7 countries. But those reserves are not infinite. Like we have a specific number, and now we are using this number. And if we think in the future where those countries needs to refill, those storages, I'm assuming that the oil prices should go higher because the production will be like that, around 100 million barrels per day, and a little bit more, 110 million barrels per day. And the demand right now is roughly 100 million barrels. But if those countries need to refill those reserves, I think the demand could be even higher. And in that specific moment, the whole story about the oil glut and the fact that we will not need oil anymore in the future is changing completely. And so my point, and especially after this war, is that it's not just right now that we need to be bullish on oil prices, but it's a sentiment that needs to stay here for longer. So overall is a long oil view. And if we speak about refinery, of course, most of them, they were damaged. And not just the Russian one, but we saw a lot of incidents in production, not just in Russia, but overall the world. In US, I think a Valero refinery had some issue a couple of months ago, also in India, in other countries. And I think this is due to the fact that they were pushing a lot and they were working with a very fast pace. And maybe also the quality of oil that they were using was not the right one. I'm not talking about the US refinery, but the other one in India or other countries. And so the system is super fragile. The crack spread that we are seeing right now, last week was around 60. Right now is about 70. Is massive. So the refinery are generating a lot of money, and the Q2 result of Valero, Philips, we will show us, of course. But at the same time, it's a tricky game. Why? Because we saw in India, Moody, that put a price cap on the refinery. So even if oil prices were going higher, they weren't capable of raising the price. So basically, the refinery industry in India is not performing as well. Same in China. Xi Jinping is doing the same. Of course, US is not is a democracy and is free, and the company are trying to make as many profit as they can do, like in a good capitalist way. But Trump already threatened the refineries a couple of, I think 1 month ago or maybe later, and he said that is going to investigate under those profit that we're doing. And so I will of course I will not expect such a strong statement from him to like shut down or put a price tag on the refinery margins, but it can happen. Why? Because the people, so us that we are living in those countries, we cannot pay as much the gas oil price. Otherwise, we have inflation. We have some sort of issues with the fact that we are paying too much gasoline that needs to take us to work or somewhere else. So this is another important aspect to put under the focus. And right now, of course, the gas prices in US are slightly above $4 per gallon, if I'm not mistaken. And these levels can go higher if the situation is not going to change. And we know that in US now, with also the Fed, we are looking at the interest rate and inflation. We know what inflation is going to bring. So this is a hot topic. And I think refineries, especially in US right now, need to understand that this crack spread, of course, cannot be like that.
Jack, because I think, Mike, you were making a really great point about the system itself and kind of what, you know, what allowed it to be a bit more resilient. We keep talking about it being fragile, but if another way to look at it, and this is the optimist in me, it's been incredibly resilient, because earlier when the war started, everyone was projecting $200 oil. We were going to blow out the oil price. And we saw all the things that in the data, China reacted, imported less, US produced more, refineries continued to run, more oil crept out of Iran than we expected. The Middle East, reacted very quickly. So my perspective on this has been the system is a lot more resilient, and there are things that maybe we don't see that now are becoming visible, including different routes for the oil to get out of the Middle East. So I kind of look at it as it's been very resilient to this point. So all of these levers, if you look at the U.S., the two, China and the U.S., that the data you had both high, massive consumers, the U.S. hasn't really tightened its belt yet. So is there yet another lever for us to pull to continue this resilience story? So instead of fragile, I kind of think of it as the industry has been quite resilient.
Well, Deborah, I love the fact that you're optimistic, and I am the same, honestly. But still, depends which country you are looking at. Of course, US is what you're saying. They are showing to the world the fact that they are resilient, not fragile at all, and the fact that they are using all the tools possible to keep the production alive and keep the world happy and satisfied with the demand. So I think this is a very important point. But if you look at other countries, the current situation is not similar. For instance, there is this Dangote refinery in Nigeria. So they are making huge profit because of the oil prices and the refined demand. But at the same time, the country literally doesn't have the production of refined product because they are exporting everything to make more profit. And so this is an important question. So the refinery of your country cannot supply your internal demand. And this put, in this case, Nigeria on a difficult position because they are overpaying for refined products. So jet fuel, gasoline, diesel. And there is going to be a huge inflation in their country.
Jacques, I was wondering, I should have mentioned this up front, but one of the things you do, part of your skill set is, if you will, is you're roaming the planet looking for any piece of data that helps you, or research that helps you unlock what's going on here. Do you mind talking just a little bit about your methods, so to speak, like how you grab your data, where you look? You don't have to give away your secrets, but you're a global data hunter, and then you pull it together. So I just think people would find it interesting how you're doing what you're doing.
Okay, so I learned this job and this work doing the physical commodity trader. So I know how to catch the information. Of course, the real information are not just between the headlines of the newspaper that are very important, because actually they can let us give a sense of the market and a sense of what's happening. But sometimes they are a little bit too pushy in one way or another. So it's important to speak with the players. It's important to speak with the people who are really involved in the market, but not only the physical one. I'm thinking also about the financial one. And the 80% plus of the liquid markets is managed by hedge fund or traders. And also those people, they really have a view on the market. So it's important also to catch the information from those players. There are specific tools. I don't want to do any kind of advertising publicity.
So question for you, I was curious, with all this, as we were going through some of the big findings, the resilience that Deborah was talking about, the extra storage that you and Mike have hit on, and the tightness of refineries, all of that stuff. What do you suppose was the conversation with the Chinese during the Trump summit about all this? Because if you replay it, not a lot came out of that in terms of announcements. Very little was shared about what was discussed. It was in the middle of the war. All of this was happening. Have you heard any good theories about what might have been discussed?
So actually, thanks for this question. Actually, I put a lot of effort of understanding what was the view, or at least what and why Trump and Xi, they decided to meet in May, so a couple of months ago. And what was the focus? Of course, the key focus was the war in Iran. But at the same time, I think that we, most of the time, put China against US, or US against China, for many different reasons. And I think they are like in a commercial fight, okay? But from the first time since a couple of months, and I'm speaking also about last year, I think both China and US, they were aligned on a specific issue, oil prices. And when Trump arrived in China a couple of months ago, one of the topic that they were discussing internally, maybe not Trump and Xi Jinping, but all the group and the people involved, was also related to the fact that China, of course, right now they're using the SPR as US, and US was willing to keep the oil prices down. We learn it by just listening to Trump's statement week after week, that one of these precise points of his campaign is to keep the oil prices down. And for China is the same, because China just want to make the best business. And if you can purchase oil at a lower price, it's better for you, because after you refine it and you resell it, and if oil goes up, you make more profit. So I think that Trump give a sort of a signal to China when they decided to sign the MOU with the US and Iran. That was the lowest point in oil prices since the beginning of the conflict. And right after that, we saw that inflows from crude oil to China start to jump again. So that specific spot opened the market for China, okay? But it was a very short spot, because right now it's closed again. So I think in that specific moment, they cooperate.
So we've been on a tour of all these pieces of the puzzle. Is there anything you feel like we haven't talked about? I know we could do insurance rates. Well, I mean, there's so many things you could do. But as you think about looking back on what took place here and the big themes, anything else we ought to touch on?
Yeah, I would like to speak about a brighter point, okay, and the fact that I think countries are waking up in a sense of they're realizing that globalization is not the same as we used to thought a couple of years ago. And right now, with Trump, we saw a strong change, I'm assuming, in the history of the humankind since the latest year. And we are passing through a global world where the Western nation were outsourcing the production to China or other Asian countries, and they were supplying everything to the Western nation, and they were growing everywhere, like not just the Western nation, but also the Asian countries. But right now, I think something cracked, okay? And we are seeing that US mainly, not Europe, I think is in a different scenario. US is trying to waking up, is trying to re-import the industrialization, not only of the pure manufacturing, but also mines, refining products. We saw what US is trying to do with rare earths that are super important for the AI boom and the semiconductor field. And right now, I think we will jump in more in a mercantilism ecosystem where there will be some nation that are willing to trade each other under fair numbers, and there will be tariff against other countries if their production is too cheap and they cannot compete against them. So overall, I think the world is waking up in a sense that it was too nice, especially for the Western countries after the last couple of years ago. And right now it's not sustainable anymore. And US is trying to change the, let's say, the future of their countries. Europe is waking up, but is still too heavily reliant on import, especially if we speak about fossil fuels that are still the basis of any economy right now, and renewables are not ready yet. So overall, the ecosystem that we saw a couple of decades ago is not the same anymore, and something for sure will change. But US is trying to push to keep leading the world as it did from the previous years, and taking away Venezuela and try to put under this zone of control. Right now, we saw with Colombia that the president of Colombia is more aligned with the Trump ideology, and in the past, the previous one, no. We are looking at Cuba with a very high focus because we don't know what can happen next, and Venezuela, of course. So they are trying to get under their zone of control those countries that previously they were more aligned with the Chinese ideology. And I think a lot of interesting things are happening right now.
The people you talk to, so you're based in Europe, you've got, I think, 75,000 followers. I should have mentioned that. But so you communicate with this very large community, but I assume a lot of them are European, for instance. What would you say of the people you communicate with? What is their outlook for how the conflict with Iran ends? What is the most recurring theory as to how this wraps up?
So yeah, luckily enough, I'm not speaking just with Europeans, but of course I have a stronger relationship with them. I'm still speaking with, of course, US people, and I think the energy that is coming from US is super fascinating because they are really believing in what happened next, and the fact that they are taking over some major aspects of this industry. And I'm very confident on the fact that they can lead, and they will still lead. On the other side, we have the Gulf countries. It depends. I have very interesting contacts with the Emirates, and also them actually they are willing to push more in the future and also to create more stability. I'm speaking with Adinok, that is the key company of the government related to oil and gas, and they're spending crazy numbers in investment, not just in their country, but also worldwide. The same is trying to do Aramco, but I think Aramco is in a different spot right now because it's under the Saudi, and with the OPEC tensions, of course, it's different. Russia is completely another story. They are super reliant on China. China is playing an unfair game against Russia because they know that they are weak, and they are, of course, using that weakness for their prosperity. And about the Europeans, I think the only one that are really winning, of course, is Norway, but is not part of EU. And right now, I think France, thanks to the nuclear plants, they are surviving, let's say. But Germany, they did, I don't know if you use this word, is an harakiri. Basically, they killed themselves after they decide to shut down the nuclear plants that they had in place. And so Europe is too reliant on gas and oil, and they still need to build massive infrastructure to get those gas and oil. And in the past, they were safe with Russia, but after the war with Ukraine, they decided to cut the supply from Russia, especially if we speak about gas. And that gas was super cheap, okay, for European. Right now, Europe is switching that gas through the pipes with LNG tankers from US mainly. And so they're switching one dependency with another one, okay? And I think that is a little bit more expensive, the one through the vessels. Of course, they are building pipeline with Algeria, so North Africa, with Kazakhstan, but still is a long period investment. And right now, without Qatar, that is the second biggest player in LNG, they can only survive with the US LNG. So that's my view.
Well, Jack, thank you so much for the help. Keep up the good work and keep us posted, and we'll keep reading.
Thank you very much.
Okay. Thank you, Jack. Thanks, everybody.